Then we are moving on to a very important area in customs, that is types of customs duties and valuation under customs. You cannot think of a CA final exam paper without these two chapters. So perhaps you don't have to get shocked, like all questions will be from these two chapters also, it is possible. So yes, in some attempts it happened, like majority of the questions out of 4 questions, 3 questions are from these two chapters only, and one more question in the part C is from a exemptions chapter. So like that, these two chapters are the heart of customs. So types of customs duty, segment 23. What are the various customs duties which are applicable and to be payable by a person? So let's see the procedure for computation of customs duty. So this clarity we need to know. So along with the illustration we will see. So let's take the assessable value. Assessable value. What is assessable value means? The value on which customs duty is assessed is known as assessable value. Let's take the assessable value as 10 lakhs. How to determine this assessable value, sir? That's the next chapter which we will be learning. Assessable value 10 lakhs. Now we have basic customs duty. Basic customs duty at the rate of, so that will be given in the question. I am taking 10%, but it will be given in the question itself. Okay. So basic customs duty that will be given at 10% on what? On assessable value. So that is 10 lakhs into 10 lakhs into 10%, that comes to 1 lakh will be taken as the basic customs duty. Then we have social welfare surcharge. Social welfare surcharge at the rate of 10%. Always it is 10% on basic customs duty. So what is the basic customs duty? 1 lakh. On that 10%, that comes to 10,000 rupees. Then we have something called as CVD, countervailing duty. And in order to counterbalance excise duty, this countervailing duty is levied on the articles. But what articles at present attracts excise duty? What are the articles that attracts excise duty at present? Alcohol, liquor for human consumption, and petroleum products attracts, even tobacco and tobacco products also attracts excise duty. So as still these 3 products attracts excise duty at present, so we have CVD at present also only on these 3 articles. What are the 3 articles on which CVD will be applicable? Alcoholic liquor for human consumption, petroleum products, and tobacco and tobacco products. CVD at the rate of 12.5%, but it will be given in the question itself. Okay, so you don't have to worry, it will be given in the question itself. CVD at 12.5% on assessable value plus basic customs duty plus social welfare surcharge. Always CVD is computed on assessable value plus basic customs duty plus social welfare surcharge, and this will be applicable on what products? Only on 3 products. What are those 3 products for which it is applicable? Alcoholic liquor for human consumption, alcoholic liquor for human consumption, then petroleum products, then tobacco and tobacco products. So for this CVD will be applicable, and in the present case there is no CVD, okay, because we are not importing these goods for which CVD is not applicable, but wherever CVD is there, this is how the computation needs to be there. And this is called as block 1. So in block 1 we have 3. What are the 3 things that we have? Basic customs duty plus social welfare surcharge plus CVD. and the sum of this block 1 is known as customs duties excluding additional customs duties. Customs duties excluding additional customs duties. Customs duties excluding additional customs duties, that is 1,10,000. Now in the second block we have 3 additional customs duties, that is safeguard duty. Safeguard duty. This safeguard duty is levied under section 8B of Customs Tariff Act whenever the goods are imported in large quantities. But how it should be computed? This will be computed as a percentage of value that will be given in the question itself. Okay. So therefore, this will be levied on imports in large quantities. So more details about that we will be seeing later. So safeguard duty, and thereafter we will be having anti-dumping duty. Anti-dumping duty under section 9A, and anti-subsidy duty. Anti-subsidy duty, this is under section 9. So these are the 3 additional customs duties that we will have, and the moment we add these 3 to customs duties excluding additional customs duties, block 2 is completed, and the sum is known as customs duties excluding IGST and cess, compensation cess. So the total, assuming that we don't have safeguard duty, anti-dumping duty, anti-subsidy duty, so this will be 1,10,000. Then on that, the third block is IGST and GST compensation cess. IGST at, it will be given in the question itself. Let's take IGST at 18%, but that 18% will be given in the question, and this will be computed on what? IGST will be computed on all customs duties. So because as per section 15(2)(a) of GST, CGST Act, taxes, duties and cess by whatever name call other than GST should be included in the value. So therefore it will be computed on assessable value plus step 2, like part 2, whatever we have discussed, all customs duties, on that we will take. Suppose in this case, what is the assessable value here? We have 10 lakhs, and what is the total customs duty we computed so far? 1,10,000. On this 10 lakh plus 1,10,000 into 18%. So please see how much you will be getting. 11,10,000 into 18%. 1,99,800, and this is IGST. Then we have GST compensation cess. GST compensation cess, of course, it is only applicable on some notified goods. GST compensation cess, so that will be given in the question at some rate. That rate will be given in the question. Only when it is given in the question we need to do, but it should be computed on what? Same. It will be computed on assessable value plus step 2. Just like how we computed GST, like that we need to take. And thereafter we have SAD, special additional duty. Why SAD is levied? SAD is levied in order to counterbalance sales tax. But SAD at present is applicable only on one product. What is that? Petroleum products. On alcohol also SAD is not there. On tobacco and tobacco products also SAD is not there. SAD is applicable only on petroleum products. So let's take SAD at 4%. SAD at 4%, but that will be given in the question, and this will be computed on what? Again this will be computed on assessable value plus step 2. And what are the products on which safeguard duty, like SAD, will be applicable? Special additional duty will be applicable on petroleum products. On petroleum products. And the moment when you see GST, SAD will not be there. Why SAD will not be there? Because Petroleum products, we don't have GST. So therefore, wherever in question SAD is there, IGST will not be there. Wherever IGST is there, SAD will not be there. But I just gave you in template as to where it will be coming. So this is block 3. Now the total is known as total customs duties payable. Total customs duties payable. The total customs duties payable is, so 1,10,000 plus 1,99,800. So that comes to 2 lakh, 3 lakh, 9,800, which means approximately 30% we are paying as customs duty on the assessable value of 10 lakhs. Okay. So this excluding additional customs duties, GST compensations and all. So we have approximately 30%. So this is the procedure in which we need to do. So therefore, what are the total list of duties that we have? Total 9 we have. Divide into 3, 3, 3. In the first block we have 3. What are those 3 in the first block? That is basic customs duty, then social welfare surcharge and CVD. Basic customs duty on assessable value, like social welfare surcharge on basic customs duty. Then CVD will be computed on assessable value plus basic customs duty plus social welfare surcharge on the notified rates given. In these 3, what is the rate that you need to remember? Social welfare surcharge will always be 10% on basic customs duty. Rest of the information will be given in the question itself. And thereafter, we have second block, additional customs duties. What are the 3 additional customs duties that we have? Safeguard duty, anti-dumping duty, anti-subsidy duty. Again, that information will be given in the question itself. Once we add that, we will be getting customs duties excluding IGST. Thereafter, in the next block, we have 3 IGST, GST compensations and SAD. IGST will be computed at the rate of 18% or whatever rate that is given on what? Assessable value plus step 2 total, whatever we have got in that. And then even compensations as also rate will be given in the question. Same way we need to do the computation like how we do GST. And SAD is also the same way, that is assessable value plus step 2. Now SAD is applicable on what products? Only on one product, that is petroleum products. Whereas CVD is applicable on what products? Petroleum products, alcoholic liquor for human consumption, tobacco and tobacco products. So that is the basic structure related to types of customs duties. So various customs duties payable, you can see in page number 165, segment 23. What are the normal customs duties? So these basic customs duty, social welfare surcharge, IGST and GST compensations are the normal customs duties which are payable. And basic customs duty at applicable rate on assessable value. Social welfare surcharge at 10% on basic customs duty. So basic customs duty will be given in the question itself. Then integrated tax, IGST, will be computed on assessable value plus all customs duties. Why? Because GST will be the last tax. Same way GST compensations is also. But GST compensations is not levied on all goods, only on notified goods imported. Then in the past, on imports, there used to be CVD and SAD to counterbalance excise duty and to counterbalance sales tax. However, now on account of GST, its applicability is limited to few goods. What are those few goods in case of CVD? So CVD is applicable on what goods? CVD is applicable on what goods? Alcoholic liquor for human consumption. Check page number 168. CVD is applicable at present only on 3 goods. CVD at present only on 3 goods, that is alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products. For those 3 only CVD applicable. Then SAD is applicable only on one product. What is that? Petroleum products. Okay. That is with respect to this. And this chart, I have just given the comparison between if the goods are sold in domestic, what are the taxes, and if the goods are imported, what are all the tax and duties that we have. For that, a comparison table I have given. Then second note, in case of exports, only basic customs duty is applicable if exports are chargeable to duty. But whenever they have given a question related to exports, don't add social welfare surcharge. All these additional customs duties and all will not be applicable on export, only on import only. So therefore on export only one rate. What is that one rate? Basic customs duty. Then note 3, In case of warehoused goods sold by way of transfer of warehouse receipt, IGST under customs will be computed on what? Assessable value plus basic customs duty plus social welfare surcharge, or sale value of such warehouse receipt, whichever is higher. For example, let's see a situation. A person has imported the goods, and those imported goods are for $10,000. Those goods are imported for $10,000, and these imported goods are deposited in warehouse. When the goods are deposited in warehouse, so the warehouse will be giving a warehouse receipt. So this warehouse receipt will be transferred to another person. Okay, so these imported goods are made by Mr. A. As and when the goods are deposited in warehouse, so therefore the warehouse will be giving a warehouse receipt. They will be giving a warehouse receipt for these goods which are deposited. Now what Mr. A is doing, he is identifying a subsequent buyer, Mr. B. So to Mr. B, so Mr. A has transferred the warehouse receipt, and collected some money from Mr. B. How much money collected? $11,000 collected. When $11,000 is collected, now what Mr. B will do? Mr. B will file the ex-bond bill of entry in the warehouse. Ex-bond bill of entry is not filed by Mr. A, but who is filing? Mr. B is filing. Now what should be the customs duty that is payable by Mr. B? Here, what is the assessable value? So in this scenario, assessable value is what? $10,000 only. $10,000 into what is the exchange rate? Let's assume 80 rupees as the exchange rate. So the assessable value will come to 8 lakh rupees. This is the assessable value. And once we get the assessable value, we need to take basic customs duty. Basic customs duty at the rate of, let's assume 10%. Therefore 80,000 will be the basic customs duty, and social welfare surcharge will be at 10% of basic customs duty, that will be 8,000. Now we need to compute IGST. To compute IGST, say IGST is at the rate of 12%. What is that they are telling for computation of IGST? Take assessable value plus basic customs duty plus social welfare surcharge, that is 8,88,000, or B, transaction value. What is the value at which these goods are sold? $11,000 into 80 rupees. 11,000 into 80 is how much? 8,80,000, whichever is higher. So 8,88,000 into 12% will be taken. So 8,88,000 into 12% is what? 1,06,500. 560. So this will be taken. So in case of warehoused goods sold, the customs duty computation, IGST, there is a slight change. What is that slight change? We will be taking whatever is the assessable value plus basic customs duty and social welfare surcharge. Usually that will be taken for computation, that we will take, or we will compare it with the transaction value of these goods which are sold. Whichever is higher, on that we multiply IGST. That's where we get the total customs duties payable. So the total customs duty payable will be 80,000 plus 8,000 plus 1,06,560. So that will come to 1,94,560. Now what about this $11,000 which is received by this person? Whether it will be covered under supply GST or not? No. Sale of warehoused goods excluded from supply. Sale of warehoused goods excluded from supply, which means GST will not be payable on this $11,000. In that spelled slow we have discussed, W refers to warehoused goods sold under customs. Now here, what if this $11,000 is taken as $12,000? Instead, if it becomes $12,000, what will happen in this scenario? If this becomes $12,000, then automatically here it will not be 8,80,000. 12,000 into 80 is how much? 9,60,000. So therefore we will be doing IGST computation on whichever is higher. What is whichever is higher? 8,88,000 or 9,60,000. Whichever is higher is 9,60,000. On that 9,60,000, 12% will be computed. Rest of the information will be same. Only IGST computation will differ. So therefore whichever is higher, 9,60,000 into 12%, how much it comes to? 1,15,200 will be taken, and the total customs duty also will be changing. Hope you understood what we need to do. So tell me what is the provision that is involved in this case. First we need to take whatever is the assessable value plus basic customs duty plus social welfare surcharge, and we need to compare with transaction value of these warehoused goods, whichever is higher, and that whichever is higher we will multiply the IGST rate. But this is applicable in which case? Only when the warehoused goods under customs are sold by way of transfer of documents to title. Now what if Mr. A has cleared the goods and thereafter he sold it to Mr. B? Then what will happen? If Mr. A has cleared the goods, thereafter when he sells to Mr. B, this discussion will not be applicable. The normal computation we do. So whatever is the customs duty payable by A, that customs duty we will do, and thereafter whenever he sell to B, that will be chargeable to GST, because these goods are sold after clearance from custom. That is not excluded from supply, and that will be chargeable to GST. So that is this note about a very important point. This can be tested in exam, this note 3. Okay. Then note 4, where basic customs duty is nil, social welfare surcharge is also nil. So therefore we don't have to compute any social welfare surcharge, because when basic customs duty becomes 0, 0 into 10%, that will also become 0. That's what they are conveying. Then what are the various additional customs duties on import that we have? Total we have protective duty, safeguard duty, anti-subsidy duty and anti-dumping duty. These are the 4 additional customs duties we have, and when it is levied, so protective duty is levied for the purpose of protection of interest of any industry established against imports. Like there is a domestic industry, that domestic industry is facing lot of problems because of the import. So in order to protect the domestic industry, they will be levying the protective duty. Whereas safeguard duty, when the goods are being imported in large quantities, there will be serious injury to the domestic industry. Again, to protect the domestic industry on account of large imports, they will be levying safeguard duty. Then when they will be levying anti-subsidy duty, when exporting country gives a subsidy to the exporter, say for example China is giving subsidy to the exporter in their country whenever they are selling a product to India. Because of that subsidy, the product is sold to India at a cheaper rate. As these goods are sold at a cheaper rate, the Indian domestic market is getting affected. So in that case, they will be levying anti-subsidy duty to inflate the product. So whenever there is a serious injury to domestic industry on account of subsidy enjoyed in the export pricing, whereas anti-dumping duty is levied whenever the exporter makes the goods in large quantities, makes the production in large quantities and dumps those goods into India at a cheaper rate. So why he will dump at a cheaper rate? Means he will sell in India at a price less than his domestic selling price, because already he has a market there. Now when he makes extra production, that extra production he can sell to India even at variable cost or little bit more than variable cost, where the contribution is positive. So therefore he is dumping those goods into India, because of which the domestic market gets affected. That's where anti-dumping duty will be levied. Again, serious injury to domestic industry on account of imports of goods at a cheaper rate. So the situation will differ. The first one is generic. The first one is generic to protect the domestic industry, and the next 3 are specific. For what purpose? If it is on account of large quantities, safeguard duty. If it is on account of subsidy given by the exporting country, anti-subsidy duty. If it is because they are dumping the goods into India, then it will be anti-dumping duty. So this Safeguard duty is levied on account of fair exports only. Actually, it is fair export. We are importing in large quantity, but it is not that they are trying to spoil the domestic market here. So that's a fair export made by them. Whereas anti-subsidy duty and anti-dumping duty is an unfair export made, because the exporting country is unfairly giving subsidy to the exporter in order to sell goods to India at a cheaper rate, and the exporter is also making unfair export by selling the goods to India at a rate less than their normal selling price. So this is unfair export by exporter, anti-dumping duty, unfair export by exporting country, then there will be anti-subsidy duty. And this protective duty is levied on the recommendations of the tariff commission. So no one is required to make any application, etc. There is a tariff commission which is appointed in India. So that tariff commission from time to time will check what are the goods which are being imported into India, and if it is going to spoil the domestic market, voluntarily they will increase the rate of customs duty on these goods. So for example, like electronics and toys. So recently on electronics and toys, the tariff commission gave recommendation to increase the customs duty. So that's where lot of toys have now become costlier. It is because of the additional duties which are levied by tariff commission and protective duties, mainly to protect the domestic industry. Whereas this safeguard duty, anti-subsidy duty and anti-dumping duty is levied by central government upon receipt of complaint or information from the domestic industry. So whenever domestic industry is making a complaint or an application that they are getting affected because of this import, then the government will look into it and they will be imposing this safeguard duty, anti-dumping duty or anti-subsidy duty. Then what is the extent of relief? So this protective duty is not actually an additional customs duty, means in the template nowhere it will come. So this is actually increased to the basic customs duty. So which means in this it will not come under additional customs duties, it will come under basic customs duty itself, which means rather than basic customs duty 10%, if there is protective duty, it will go to 20%, it will go to 30%. Once in India, so I remember on wheat, on atta they have levied 40% as the basic customs duty, because already atta is available in India, but our so-called people, because chapati will become soft if they use imported atta, like that they are thinking. So therefore they imported atta, and on which government got furious and they have levied 40% basic customs duty and they said you import now. So therefore so basic customs duty will be increased. So it's not because of the imported atta the chapati will become soft. How much effort you are putting on pressing that, so then only it will become soft. Okay, that fact our dad's little princess don't know, na. So therefore so extent of relief and this protective duty is increase in basic customs duty only, and therefore this is not a separate line item, whereas this safeguard duty, anti-subsidy duty and anti-dumping duty is an additional line in the total customs duty computation, where it will come in the second block. And how the safeguard duty will be computed? There will be a rate that will be given in question. Take that rate and multiply it on the value. What value, sir? Either assessable value or the landed value. What is assessable value? Assessable value means the value given in the question. And landing value means assessable value plus basic customs duty plus social welfare surcharge. So rate will be specified in the question itself, and this will be applied on what? So both this anti-subsidy duty as well as safeguard duty, either on assessable value or landed value, either on assessable value or landed value. What will be taken as landed value? Assessable value plus basic customs duty plus social welfare surcharge will be taken as the landed value. It will be given in the question itself. Both safeguard duty as well as anti-subsidy duty, both will be based on the rate that is specified in the question. And how they will decide that rate? to the extent adequate to prevent the remedy, to the extent of subsidy allowed in the export price, they will be fixing a percentage. Say for example 18% or 20% or 25%, like that they will fix the rate, and that rate we need to apply and arrive at the customs additional customs duty. Whereas anti-dumping duty computation is different. Anti-dumping duty will be absolute. It's not a percentage of some value, it's absolute. So we will do the computation separately, that is lower of dumping margin or injury margin. Dumping margin or injury margin, whichever is lower will be taken. Now dumping margin, who is actually dumping? Exporter is dumping. So dumping margin should be seen from whose perspective? Exporter's perspective. What is dumping margin? The price at which he is selling in his country minus the price at which he is exporting to India. Are you understanding this? So dumping margin should be seen from exporter point of view, the price at which he is selling in his country minus the price at which he is exporting to India. Whereas injury margin should be seen from whose perspective? Person in India. To what extent he is injured? Whatever is the normal selling price in India minus import price, that difference is the injury for him. Why is he getting injured here? Because goods are imported at cheaper rate. So see what is the selling price in India minus what is the import price, that will be taken as the injury margin. So dumping margin is sale price in exporting country minus export price to India, whereas injury margin is normal sale price in India minus landed value. Import price means what? Landed value. What is landed value? Already we saw assessable value plus basic customs duty plus social welfare surcharge. In these two values, whichever is lower should be taken. What if we don't have the information about the goods which are sold in the exporting country? Suppose in the exporting country, we don't have the price at which they are sold in that country. Maybe they are not selling in that country. Then what we need to do? See the price at which the exporting country is selling to a third country. You take that. What is the price at which exporting country is selling to a third country? You take that as the normal selling price in exporting country. If that is also not available, you take cost of production plus usual profit margin in the exporting country. So then you compare it here. So if the sale price in exporting country is not available, so what is that we need to do? When this is not available, sale price in exporting country not available, what we need to do? Replace with what? Export price to third country, export price to third country, or cost plus usual profit margin, or cost plus usual profit margin, that should be taken. Replace with export price to third country or cost plus usual profit margin. Then whether investigation is required in case of protective duty? No, investigation is not required in case of protective duty. Why not required in case of protective duty? Because anyhow tariff commission is only levying that. Then whether investigation is required in case of other three cases? Yes, because that other three cases, it is only based on application by the importer or domestic industry, it will happen. So therefore investigation is required. Then until the time the investigation is completed, a provisional duty will be levied. In case of safeguard duty, anti-subsidy duty and anti-dumping duty, they carry out the investigation. Whenever the complaint is received, immediately they will not levy, they will do the investigation. But until that point of time, they can levy a provisional duty. What is the duration of levy of provisional duty? If it is safeguard duty for 200 days, and if it is anti-subsidy duty for 4 months, if it is anti-dumping duty for 6 months, which means within this 200 days, 4 months or 6 months, they need to complete the investigation and decide whether they need to levy or not. Suppose if they have decided not to levy after investigation, then whatever duty that they have levied, will it be refunded? Yes, refund will be allowed. Suppose if they have decided that, so you have to pay extra amount, then the differential duty will be payable. Okay, but what is the time limit available for deciding whether this much should be levied or not, or whatever safeguard duty to be levied or not? So that is In case of safeguard duty, 200 days, anti-subsidy duty, 4 months, and anti-dumping duty, 6 months. So within that time, they can levy provisional duty and excess duty on account of finalization, either refund allowed or differential duty payable. Then, once they levy this safeguard duty, anti-subsidy duty and anti-dumping duty, for what period they will be levying? Duration of levy. Safeguard duty, 4 years, plus it can be extended for a further period not exceeding 10 years max. So which means total it will be 10 years. 4 years plus 6 years. So maximum 10 years. That is the period for which they can extend. Whereas anti-subsidy duty and anti-dumping duty, there is no time limit. Means they can extend it to maximum time. There is no time limit here. So which means every 5 years they need to do a review and they need to decide whether to extend or not. So 5 years plus 5 years at a time after review, which means there is no maximum time limit like safeguard duty. Safeguard duty is for a period of 10 years only, but anti-subsidy duty and anti-dumping duty can be levied for 20 years, 30 years, 40 years also, but every 5 years they need to do the review. Now what happens here is that suppose 5-year period is over, still they have not decided whether to continue or not this anti-subsidy duty, anti-dumping duty. There is an automatic extension for 1 year. See this, automatic extension for 1 year if not decided whether to extend or not within the expiry of 5 years. So 5 years over, they have not decided, automatically 1 year is extended. In that 1 year they should decide. If they have not decided in that 1 year also, then the anti-dumping duties and anti-subsidy duty will stop. Suppose if they have decided to extend, then it will get extended. So that 1 year is like a transition period. First 5 years they should have decided, they have not done. So automatic extension for 1 year. In this 1 year period, either they have to decide to extend or not. If they have decided to extend, it will continue. If they have decided not to continue, extend, then it will not continue. If they keep quiet, automatically it will stop, because 1 year is only the automatic extension, thereafter no extension given. Then next, exemption from levy. This 3, that is safeguard duty, anti-subsidy duty and anti-dumping duty, all these 3 we have a common exemption. It is not applicable on imports by 100% EOU or a unit in SEZ. However, if you try to import it to a EOU or SEZ, thereafter sell in DTA, definitely there will be this duty, because you are trying to evade. So if it is imported in EOU or SEZ and consumed in EOU or SEZ, no need to pay. If it is imported in EOU or SEZ, but you are trying to clear it to domestic tariff area, then we need to pay. That is this. So up to 90 days before the date of imports. However, if imported and cleared to DTA, it is applicable. Then what is the retrospective levy? What is retrospective levy means? Today they give a notification to levy this retrospectively backwards. So, but how many days backwards they can levy? 90 days. But this is only applicable in case of anti-subsidy duty and anti-dumping duty, not for safeguard duty. Then see the notes here. In case of imports in large quantities, government can resort to tariff quota. What is tariff quota? This is an alternative to safeguard duty measure. Up to this quantity you import, you pay the regular customs duty. Beyond this quantity you import, you pay the higher customs duty. Okay, like that a tariff rate quota can be fixed. In case of imports in large quantities, government can resort to tariff rate quota, that is fixing the maximum quantity of imports as safeguard measure instead of safeguard duty. Then one more thing, as both anti-subsidy and anti-dumping is for the same reason more or less, that goods are imported at a cheaper rate. So goods are imported at a cheaper rate, anti-dumping duty, and goods are imported into India which enjoys the subsidy, then both are more or less for the same purpose. Then in that case, whether both will be levied. Suppose if the government of that country has given subsidy plus these goods are brought into India at a cheaper rate, whether both anti-subsidy and anti-dumping will be there? No. anti-subsidy duty and anti-dumping duty is mutually exclusive. Means out of these two, any one will be there. But safeguard duty plus anti-dumping duty, yes. Safeguard duty plus anti-subsidy duty, yes. Okay. Then some more points in this regard. Non-applicability of safeguard duty. What is this non-applicability of safeguard duty? Already we know one non-applicability of safeguard duty. What is that? Imports by 100% EOU or a unit in SEZ unless they are clearing it to DTA. So they are eligible for the exemption. Am I right? Then two more points also we have. Suppose on a product there is safeguard duty. And that product, if you are importing from a developing country, again I am repeating, import of chocolate, that chocolate attracts safeguard duty. Now that chocolate you are importing from a developing country, and import of chocolate from a developing country, you are importing only from one developing country, does not exceed 3% of the total imports of that article into India, then there is no safeguard duty. Articles originating from a developing country, and so long as the percentage of imports of that article into India does not exceed 3% of the total imports of that article. Means what? We have imported chocolates into India, somewhere like 4,000 crores worth of chocolate we imported. In that 4,000 crores worth of chocolate imported, like total, we are importing from developed countries, developing countries, like that. But in that developing country, only one developing country we have imported. And what is the percentage? Say 2%. Okay. Then on those chocolates imported from that developing country, there is no safeguard duty. But import from remaining countries, will it attract safeguard duty? Yes. Then next, articles originating from more than one developing country. So we are importing from more than one developing country. So long as the aggregate imports from the developing country with less than 3% share of imports taken together does not exceed 9% of the total imports of that article. Now, when this point will be applicable? The first point will be applicable when you are importing from a developing country. But this point is applicable when you are importing from more than one developing country. So you are importing from, say, 4 developing countries and remaining and all developed countries. Now, see the percentage from each developing country to total and group it less than 3%. Less than 3%, whichever comes, you group it and take it together. If that sum does not exceed 9%, on this group there won't be safeguard duty. Suppose if that sum exceeds 9%, on this group there will be safeguard duty, but which should be taken into the group less than 3%, not equal to 3%. So in the previous point it is less than or equals to 3%, here it is less than 3%. It's not a mistake, it's not a typo, it is the provision that is there. Articles originating from more than one developing country, so long as the aggregate imports from developing countries with less than 3% share of imports taken together does not exceed 9% of the total imports of that article, then safeguard duty will not be there. Have a look into page number 167, circumvention of anti-subsidy duty and anti-dumping duty. Circumvention refers to trying to escape from payment of duty, is known as circumvention of ASD and ADD. How we will try to escape from payment of this duty? So if a particular product attracts anti-dumping duty or anti-subsidy duty, we will change the description of the product on the bill. So on the bill or invoice or on the package, we will change the description of the product. When we change the description of the product, customs department will think this as some other product, and only when they examine they will come to know that this is a different product. So like that, if you try to escape from payment of ASD or ADD by altering the description or name or composition, or by import of such article in unassembled or disassembled form. For example, if you are importing a car and that attracts a anti-dumping duty, what you are trying to do is that you are trying to import it as parts of the car and assemble it here. So therefore you are trying to import in disassembled or unassembled form to escape from this, or by changing the country of origin. Suppose if you are importing from a particular country that attracts safeguard duty or anti-dumping duty, etc. Sorry, anti-subsidy duty or anti-dumping duty, so you are just shifting that to some other country, and from that country you are importing, saying that you are not importing from Japan, you are importing from Korea. So like that you are changing the country of origin. Or in any other manner you try to escape from payment of ASD or ADD. Now for those altered articles, or those articles imported in disassembled or unassembled form, or those articles imported from some other country of origin also, they can extend this notification. It may extend the ASD or ADD to such other article also from such date not earlier than the date of initiation of inquiry. So if you try to circumvent these two by changing the alteration, like by changing the description, or by importing in this assembled, disassembled or unassembled form, or by changing the country of origin, no need to give a new notification. The same existing notification can be extended to these goods also. That is this. Then absorption of ASD and ADD. When you try to absorb the ASD or ADD, in the sense exporter is selling to you up to a particular rate, and that product when you are importing into India, it attracts an anti-dumping duty. Now how much our Indian government levied anti-dumping duty, that much discount exporter has given. You understood? Indian government has levied anti-dumping duty or anti-subsidy duty. How much ADD or ASD levied by Indian government, to that extent exporter is giving a discount, so that still the product is imported at a cheaper rate. Then to whatever extent exporter has given discount, to that extent again here the ADD and ASD can be increased. That is absorption of ASD ADD, where the central government on such inquiry, as it may consider necessary, is of the opinion that absorption of ASD or ADD has taken place, whereby anti-dumping duty so imposed is rendered ineffective. When it will be rendered ineffective? If the exporter gives to such extent discount in the price, then the government may modify such duty to counter the effect of such absorption from such date not earlier than the date of initiation of inquiry. So mainly when absorption is said to have taken place, absorption is said to have taken place if there is a decrease in the export price of an article without any commensurate change in the cost of production. Means purposively to absorb this ADD or ASD exporter is giving. Now again no need to give a new notification. So government is having power to enhance the ADD and ASD to counter effect that absorption. Then this already we have seen old customs duty is relevant and how to compute the customs duty payable on import. Then we have section 19 here. What is the relevant rate that should be taken when you are importing set of articles? Means you are importing a package. That package contains some set of articles. Then each and every article may be taxable at a different rate. And this is as good as like composite supply, mixed supply, which we studied in GST the same way. So you are importing a set of articles. Say for example, you are importing camera, DSLR camera, tripod, SD card and lens. These 4 articles you are importing as a package. And each and every article may have a different rate of customs duty or the same rate of customs duty. If it is having the same rate of customs duty, there is no problem. So you will take that rate and multiply on the entire value. If it is liable to different rates, then what we need to do? Check whether separate values are ascertainable in the invoice. Camera this much, and then lens this much, tripod this much, SD card this much, like that separately it is available. Yes. Then you take that particular value for that particular rate and you compute the customs duty payable, chargeable to customs duty accordingly based on the separate value. Suppose if it is not available separately, means they have given a single price. All these 4 articles they gave a single price, means it is like a package offer, as a bulk offer they have given. Then in that case separate price is not ascertainable now. So now check whether these are accessories compulsorily supplied along with the main article. Means the moment you buy this DSLR camera, all these will come as compulsory accessories. Yes, then don't worry, whatever is the main article rate that you apply on the entire price. So compulsorily supplied along with the main article and separate price not available, like composite supply. What we will do, we'll take the rate of principal supply, like that you take the rate of the main article and apply it on the entire consignment. No, these are not compulsory accessories, you are bundling it, means you are selecting. So usually when you buy anything in Amazon, when you scroll down, frequently bought together, like that they will be telling. So this also you can buy along with this, like that. So therefore you are purchasing camera is always separate, and say tripod is a compulsory accessory, but SD card and lens you have to buy separately. If you go for Apple products and all, what they do, so phone alone they will give, cable separate, adapter separate. You understood or not? Everything will be separately they will be giving, and so that adapter cost itself will be somewhere like 7,500. But what some people will do, so who wanted to use only Apple products and all, they will buy phone and they will buy cable, that case, that back case, adapter. This adapter, back case and cable, its cost itself will be Android mobile cost. You understood or not? But people will be purchasing that. So now this is bundle. They will not compulsorily give these accessories. Gone are those days. So they will not give anything. Everything you need to buy separately. Then in that case, capable of supply separately, but separate price not available, because the moment everything you bundle it as together, they will put only a single price, cart total, so on. So there is no separate price available. Then in that case, what should we do? Highest rate. Among these articles will have some highest rate of customs duty that you apply on the entire price. Entire consignment chargeable to duty at the highest of such rates. How to avoid this? Get a separate value. Ensure that in the invoice there is separate price given, so that respective rate will be taken for respective value. What is the problem in this? Even some non-dutiable goods, if it is there in the list, that goods also gets dutiable because of the highest rate. For example, 4 products are there, in that one product is exempted. Now remaining 3 are dutiable. Now what will happen when we take highest rate? Even that exempted product also will become dutiable when we take the highest rate. So that's what articles not liable to duty also will be chargeable to duty. So again, how to avoid that? If you are able to get a separate value, it is possible. That is with respect to this. So here you need to remember that whenever you import as a set of articles, if there is a single price, always it is like a mixed supply. What is that? Highest rate you take. Suppose if it is like a compulsory accessories supplied along with the main article, then it will be taken as composite supply, main article rate will be taken. If it is separate price, always it is like individual supplies only, which means separate rate will be taken for separate value. This is given in section 19. With this we completed segment 23, that is types of customs duties.